Hi, everyone. I have a question and a poll for you today. Are you in your 20s and you're thinking about your finances? Are you in your 30s and you're thinking about your finances? Are you over 40 and 50 and you're thinking about your finances? Well, this discussion is for you all today. And I am focused on the people in their 20s, but this topic will suffice everybody who are over a certain age and still thinking about their finances. Let's talk about it. Let's jump right in. So, if you're in your 20s, your 30s, your 40s, your 50s, and over 60 and still thinking about your finances, then you're not alone. You're definitely not alone. I'm in my 40s and over 40, and I'm still thinking about my finances, and I'm on that journey as well with you all today. So let's talk about it. I read an article in CNBC Money, and it's titled 59% of Americans under age 25 say a well funded savings account is a top priority. And here are 3 steps to get started. This was published on June the 4th by Natalie Wu. So let's talk about it today. Even though this article is geared for people 25 and under, I say, hey, people 25 and older can benefit from this. So I'm speaking to the young people today, as well as people in general who are over a certain age and still thinking about their finances. I am too. So let's jump right into it. And again, you're not alone. A recent survey found that 59% of young Americans say having a solid savings account is a top priority, right? Right. But most young people are struggling to make it happen. And not even young people, it's uh, middle-aged people, older people, everybody's struggling to kind of make that happen, have a good solid savings account. And if you have a good solid savings account, put it in the comments below and how you did it. All information is good to help everyone. I'm here to help everybody. My channel is for everybody, young, middle age, older, over a certain age. We all can benefit from this information, right? So let's keep going. So yeah, 59% of young Americans say having a solid savings account is a top priority, but most are struggling to make it happen. So today we're diving into 3 simple steps that'll help you build your savings starting right now. Let's go. Yay. I'm so excited. And I'm happy too. Just a side note, I know for myself, I am happy. I started a savings account, a separate savings account with a high yield banking through SoFi. I don't know if a lot of you guys heard of that. And I had tried it out. I've been with SoFi for maybe close to a year now, not maybe 7 months or so, but I'm really enjoying it. It's a high yield savings account, and it will give you like between 3 and 4%. So I encourage young people and people in general who are over 25, definitely take a look at SoFi. And then they have other high yield savings account, but that would be up to you, whichever you choose to select. However, if you're looking to go the SoFi route, then I'm going to put my link below in the description. So make sure you check on and click on that link. That'll get you to the SoFi and get you set up with SoFi. And that'll be under my description. And so let's continue. I wanted to do the side note because I'm very happy with SoFi. And one of the things that I do when I find a business that I'm happy with, I'm going to state it, right? Right. All right. So continuing with the article and the three things that keep it simple to help you get saving right now. And now, let's take a look here. This is a statistic I saw here, too. So, here's the reality. While the intention is there, only 15% of Gen Z adults are consistently saving. I'll say that again. And it's not even Gen Z, it's everybody, you know? Um, and we all have to share our best practices, and that's my passion for doing my channel, is sharing my best practices to help somebody. Hopefully somebody's listening. So let's continue. So let's take a look at that reality. So the reality is, while the intention is good, only 15% of Gen Z adults are consistently saving part of their paycheck. And less than half Americans can cover $1,000 emergency fund from their savings. So if they had an emergency, a lot of Americans couldn't cover $1,000, right? So if they had that emergency, it couldn't be covered. And that's a big gap between goals and habits, right? So that's the word, goals and habits. So let's take another look into how much you should be saving and how you could save. But before I go into that, it's on my mind to talk about very quickly the goals and the habits. So one of the things that I did to build up my savings, because I have to honestly say, I was in that boat at one time in my life. And so what I had to do was automate my savings. And so I did just that. I I did a reoccurring amount. I started small. I started with $25 every paycheck. Then I increased it to $50 every paycheck. And then I increased it again. And that's going to be based on you. And that's how I was able to build my savings. From my regular checking and savings that I had, I just had all my amounts reoccurring every month. And so I encourage that whoever you bank with, have it reoccurring every month so that your money's is going straight to your savings. You could say, I want $100 to go in my savings every month, and it will just go. And it's like you're not even thinking about it. It's just a habit and it's done. And so that's one of the ways I know personally that I'm sharing that I built up my savings very quickly. Now, going back to how much you should be saving, now experts recommend keeping at least 1 month of your expenses in your checking account. And I do understand that. I do agree with that if you're able to. So you want to keep at least 1 month of that in your checking. And then it's indicated by experts as well that you want to keep at least 3 to 6 months in your savings for emergency. So what that may look like is if anything happens, you have an emergency, or if you're transitioning jobs or you lose a job, then you will be able to fall back on your savings. But it is recommended between 3 to 6 months in your savings. And I do understand padding your checking account. So you do want to do that with at least 1 month of expenses. Now, after that is what the experts say. Think about long term goals like retirement. Now, I do agree with that. You want to make sure you build up your savings and then get to the retirement. Now, I do say you could do both at the same time because that's what I had to do. I didn't want to not take advantage of my retirement. Now, when we speak about retirement, retirement could go two ways. It's going to be if you have your job, your 401k. Make sure you're taking advantage of that 401k from your employer. You're getting the employer match. Try to get up to 6% if you can, or however high the company matches. But if you're starting with 3% and you're taking advantage of that, start that way, but try to increase it. Make sure you're participating in those 1% a year increases, or you can increase it on your own. But that's one way when we speak about retirement, right? Right. Another thing we speak about retirement is always good. Sure, you have your 401k, but it's always good as a young person or no matter how old you are, have a separate retirement account, right? And what does that mean? A separate retirement account means you have an IRA. It's an individual IRA. And an IRA is an individual retirement account. And you could set that up with Webull. You could set it up with Fidelity, Vanguard, any brokerage firm, Charles Schwab. But that is something you definitely want to set up, and you could do all of that online, right? And it's important to set up a retirement account and begin to place your monies in. And I have to do say for a disclaimer, I am not a financial advisor, and the information I provide is for education only. I'm not providing financial advice. However, with that being said, I am a financial motivational coach, and I'm here to help and guide you and give you that motivation and that knowledge so that you can help yourself as well. So, what I was speaking towards with the IRA, once you set up your IRA, sure, it's going to be a little confusing. Like, what do I put the money in? If you want to be safe, play safe, you want to go into mutual funds, or even, you could go into ETFs, is what I do. So, index funds, ETFs. Um, and that's going to be your way to go, right? So you want to make sure that you are putting your money in something that's going to be safe and build that return on your investment, right? Right. So let's take a look again. Let's see. And that's what I wanted to speak towards, because I do both at the same time. Even though I'm still building my retirement fund, I also save as well. And you have to figure out that balance for you. You have to find, hey, do I just want to go all in on my savings? And then once that's done, do I want to go all in on my retirement? But if you're working a job, then of course, you're going to have your 401k. So you'll have your retirement that way. But you can do an individual retirement account. So that's a whole nother conversation, and I will have more videos on that as well. And then there's other great YouTube creators that speak towards that as well. So I'm here to encourage everybody to help share all of the information that we can, right? Right. And taking a look, so after the retirement is done, think about how much you should be saving, and you get that done, and you get your expenses to 1 month in your checking, 3 to 6 months in your savings, and then you start thinking about long-term retirement. Then you're going to focus on yourself. That's the next step. That's step 3. So just kind of like review. The first step was What was the issue? So here's the problem. The reality is, while the intention is there, only 15% of Gen Z adults are consistently saving part of their paycheck, and less than half Americans can cover $1,000 emergency from their savings. And that's a big gap. So that's the problem. And then step two, how much you should be saving. And we went over that, the 1 month expenses in your checking and the 3 to 6 months in your savings. And then step three is focus on yourself, right? So you want to focus on yourself. And what does focusing on yourself look like? So focus on yourself. Just because your friend brought a new car doesn't mean you need one. I tell everybody I drove an old car for years. I got laughed at, I got talked about. I was working in my financial, my professional jobs, and everybody would say, yeah, you could afford a better car than that. But to me, my oh goodness, the words escape me, but my importance was on having a better, safer place to live and putting my money there versus having a nicer car. So everybody have their own things that they want, the way they want to put their monies, right? But as a young person, and even as a person over 25, you don't want to be like everyone else just because somebody does this and you're trying to show people that you got it, that you're going to buy a car. So stick with what you can do. And I have to say, I got me a different car. Of course, I had my previous car for a long time, and I'm happy with my car. It's not a brand new car. It's a pre-owned vehicle that's very nice, well kept. The year is a little, older year, but it's still beautiful. It looks like it's brand new, but I'm not trying to keep up with the Joneses. The Joneses, I can never say that, but you guys know what I mean. Because I'd be thinking about it too much. But I'm not trying to be like everybody else. And even when I got my pre-owned car, everybody's like, "Oh, you could have got something different or newer." I'm like, "No, I'm good. I'm good with what I got. It's paid, and I'm fine." And I like the way it looked. But going back, I don't want to get off topic. But lastly, just you don't want to be like everybody else. And a financial advisor spoke to it and says the biggest mistake young adults make is letting spending, like when they income rises, they spend more. So you shouldn't do that. You should live within your means and resist the urge to keep up with everyone else, right? Right. And just taking a look here, along with taking care and focusing on yourself, we take a look at tracking your spending, right? So you want to definitely take a look at where every dollar is going. And this is still a part of focusing on yourself. This is within that. So you want to track your spending. And you want to make sure that you're using like a budgeting app. They have all types of different budgeting apps that you can use. Um, and I recommend and also say that you can use the app called YNAB and also Pocket Guard. But one of the things that I did is I took a look at Nerd Wallet, and Nerd Wallet will give you, if you type in apps that do budgets, it will give you all of the ones. Some of them may have a cost, and then some of them will give you a free trial, and then you'll have to pay after that. But if that's not what you want to do, then you can also go into Chat GBT and ask them to make you a budget for, the month, the year. And that can happen too, but then you're going to still have to do a lot of upkeep with that. But I tell you, I'm kind of old school. So I have an Excel spreadsheet that I use just every month. And then, I may add different Excel spreadsheets. And sometimes I go pen and paper and I have like my physical journals. And then I have journal that I use online journal, because sometimes I don't want to write, and then sometimes I just want to type it in online. I have that as well. And I tell you, I don't have it now, but I will have some budgeting journals. So stay tuned. I will have that. I'm not sure, maybe within a week or two, I'm going to try to put that out. But you have different ways that you can do your budget and track your spending, right? Right. Now, also going on focusing on yourself, and this is step 3, but it's all under focus under yourself. And also, you want to make sure that you make saving your money a habit. So, right? So, make saving a habit. Even if you start with $20 every month in your savings and reoccurring automatic, every dollar counts. I know it doesn't sound small, but sometimes $20 in this economy could be big for people. So I would say just make it count, right? And and just know you can increase it at any time, like in a example I gave earlier, how I started, with $25, and I increased it when I could, once I saw that I was able to increase it. But one of the things that helps, it's like I'm not even thinking about it, it's putting the money in my savings automatically. So keep in mind, you want to get a good savings account that's going to give you a good interest, your high yield savings account. I will say it that way. They have a lot of different ones out there. I have one, a link. I'm with SoFi, so I can provide you a referral to SoFi, and you could click on my link. But yeah, if you do all of that, that's going to help. So to sum everything up and kind of close it out for us today, just remember, the earlier you start building good habits, the more freedom you'll have down the line with your monies, right? So thank you so much for watching. Again, my name is Ann with Just Sharing, and I appreciate all of you guys, and I'm here to help. And if you found my information helpful, please like and subscribe to this channel. Thank you so much for watching. Have a great day. Bye.